Welcome back, traders. Tomorrow, September 26th, is the big day for the core PC index, the Fed's favorite inflation measure, which policymakers closely watch before making policy decisions. Now, the Fed appeared less worried about U.S. import tariffs pushing inflation higher during last week's policy meeting, and it even called for at least 2 rate reductions by the end of this year. So could this week's data affect the Fed's mind? Well, probably not. The Fed has already set its rate cut path, and any surprises in the figures could only determine the size of the next policy move. So, for example, if inflation arrives hotter than expected, that could mean that perhaps a normal 25 basis point rate cut could be preferable during the next meeting against any suggestions for a bold 50 basis point reduction. So in this case, the dollar could benefit, the data could leave the US dollar, and consequently other dollar-denominated markets such as gold could move lower. In the meantime, Bitcoin is also trading at the make or break point against the green pack. So gold, dollar, yen, and Bitcoin against the US dollar will be analyzed in this video. So let's pull up charts and see what the technical signal suggests. And looking first at dollar yen, we can see that the US dollar had an amazing session against the Japanese yen yesterday. It managed to surpass its 200-day moving average for the first time since July. But we are not really confident that this upward move could see a continuation in the coming sessions. Of course, that long week candlestick over here suggested a change in sentiment, and then we saw the price indeed changing direction to the upside, but we are still below the 50% Fibonacci retracement level of this down leg over here of 149.37, and even below the 149 round level. So some caution is still needed, and the stochastic over here is actually reflecting some skepticism. We can see that the indicator is above 80, is above its 80 overbought level. So perhaps that suggests that any future upside movements could be limited. Looking at other indicators, of course, we can see that the RSI and the MACD are making progress. They are showing, they are holding a positive slope. So we can say that in the meantime, the short-term bias is positive to neutral. So traders will probably stay patient until the price surpasses the 149.37 number before targeting July's peak near the 151 round level. The 61.8% Fibonacci retracement mark is also in short distance at 151.75, and then if the rally continues, it will be quite interesting to see if upside pressures will persist above this tentative resistance line at 152.35. Now, in the opposite case, that downside pressures resume with the price falling back below the 200-day moving average, then in this case, support could initially come around 147.30. While lower than that, there is another important trend line zone at 146.30. So as long as we hold above this zone at 146.30, there is less concern for an outlook deterioration. So once we breach that floor, then we could see more selling, fresh selling towards the 144.35 zone, which is the actually the 23.6% Fibonacci mark. Now looking at the gold, the precious metal had an amazing session as well. Actually, it has the best month so far in this year. That's an almost 14% rally to a new all-time high of 3,790. While encouragingly, the 3,630 territory over here managed to push the price higher today, and therefore we saw the price stretching to a new all-time high at 3,790. that prevented this pullback extending below the 20-day moving average. So we saw more upside pressures in this market earlier this week. However, looking to the upside, we can see that well, it seems that the price is trading within a bullish channel, and it's very close to the upper band of this potential bullish channel near 3,800. So I would rule out a pullback, given that both the RSI and the stochastic indicators down here are still fluctuating around their overbought level. So that increases the risk of a downside move. And of course, following this vertical rally, almost vertical rally, some profit taking could be normal, could be possible. So we could see some stability. Now in the event we break below the 3,700 and 3,735 zone, then the 3,600 and 3,630 territory could come next into view. We could see another test within this zone. If in this case selling pressure strengthen below this threshold, then the price could tumble towards the 3,500 psychological mark, where it almost peaked back in April. The 50-day moving average is also approaching this territory, so any price movements here could attract special attention before we head towards the lower band of this bullish formation of 3,400. And now looking at Bitcoin over here. While Bitcoin is at the make or break point, it's still trading around this ascending trend line near 111,500. The 113,000 mark is also within this territory. It proved to be a barrier, so we are keeping a close eye whether the price will break below this trend line or stage a nice rebound. Looking at the technical indicators, while chances are still negative, the stochastic and the RSI are still pointing downwards. So we haven't reached oversold territory yet, although the stochastic oscillator is very close to its 20 oversold mark. So it would be pretty interesting to see whether downside pressures will persist, particularly after the price closed below its 20 and 50-day moving averages, the orange and the green lines over here near 114,300. So we're still neutral and waiting either break below 111,500, in which case the price could reach the 107,500 territory. That's the pivot area that the price managed to rebound back in August. The 61.8% Fibonacci retracement level of this upleg is also very close at 105,375, and the 200-day moving average could add extra importance to this territory once it converges there. Now in the bullish case that the price successfully moves above 140,300, then such a move wouldn't really upgrade the short-term outlook. We could still remain within this sideways pattern and below the 117,700. Once we breach that wall, then in this case we could see a strong buying interest, probably back towards the 122,000, 123,000 resistance territory taken from July and August. So that could be critical territory for any additional upside moves. If we get a green light here, then the rally could stretch towards the next barrier, probably towards the 126,000 round level, or even higher up to this former support line, which is currently within the 127,500 territory. So that's everything I wanted to share with you guys. Thank you for watching. If you like my video, please subscribe and like my video. I will be back next week with more technical updates. So we should have a great trading session, a great weekend, and we will be back soon for more analysis. Bye bye for now.